Mrinal, of course, the CEO and CIO at InCred. Mrinal, afternoon. Thank you so much for your time. Friday afternoon. Well, not a great time to talk markets. People are already planning their weekends. Did you come across that note? Very, kind of a very honest admission from Chris Wood this morning in the Greed and Fear, saying that yes, India is the best game in town right now, superior macros, all of that is fine, but a kind of an admission that it is turning quite expensive. As a practitioner, are you finding it challenging too?
Yeah, good afternoon. Yes, that's a practical challenge. Yes, we had the market run up significantly in last 12 to 18 months, so it makes it more challenging. Obviously, when the valuations are elevated, the potential returns get subdued. So you need to also manage the return expectations, and you need to go down the ladder in terms of market cap. You need to actually dig deeper, and we expect customers to have a higher horizon when they make an entry at this juncture. It does become challenging when the markets have a very sharp run up in a short span of time.
Since you are saying that there is a possibility to jump in the market even now, you just have to stretch your time frame, Renal. Where is it that you still see value and growth both on the table?
Well, too much to ask, both value and growth. So, value school of thought will find it difficult to pick a lot of names because clearly the valuations have run up. From a growth perspective, yes, you can actually, because we are very rightly placed in the trajectory for the economy. I think so. From that angle, you can still try to narrow down on spaces. Let's say, for example, I would say rural would be a great place to be. There has been subdued demand. We have seen largely rural-facing businesses seeing volumes contract in the last 3 years, but in the last 2 quarters in particular, we've seen that there has been a rest in that decline, and there has been some green shoots of growth. Hopefully, in the next 12 months, we would start seeing rural demand picking up, and it's a very large part of economy. And rural consumption behaviors in terms of SKU preferences are very different. So we might actually, as growth percolates, as incomes improve, we would see definitely those SKUs benefit. So that is one space that we are quite upbeat about. We also think building material, particularly cement, is a very well placed sector. It feeds into both housing as well as infrastructure, and that is a significant capex attraction for both the government and the private sector. The government continues to be a very large spender in the economy. The recent vote on account actually just cemented that. And we do expect that when, as and when the private capex picks up, there will be significant beneficiaries in that space as well.
Industrials, infrastructure related theme is something that you like, Mrinal, but I was just going through the fact sheet of your emerging business fund as well, and I see a lot of exposure to auto specifically, almost 23% of the weight. Hero, Amara Raja, Maruti, Sandhar Tech, a lot of these auto names feature in the list. What makes you that bullish on the auto sector right now? Hasn't it run up already, and are you looking at probably trimming some of the position?
So, well, the large weight is in a way reflection of, as you say, the run up that has happened in a year or so. But if you notice, it is auto and auto ancillary, and it is equally spread between two-wheeler, four-wheelers, and ancillaries. And within that, more towards volume trajectory. Like my earlier comment, we are also making a step into the rural consumption basket through this investment. So two-wheelers in particular is a very rural-heavy business. So clearly, but that weight is a largely a reflection of our investments having done well in the recent past.
Mrinal, I see cash and cash equivalent being 26%. Is that right? Is it that difficult to find ideas right now? And also financials is one space you're clearly underweight on. Are you turning the corner there and looking at financials positively, or do you think there's further derating which will happen in this year?
So on financials in particular, very stock specific, we've seen drawdown in one large name, looks appealing from a longer perspective, very stock specific. So we have been running a large underweight on financials, and that cash that you see, there would be some that would get deployed in that direction as we progress, as we find the risk reward getting interesting. But I would avoid making a blanket statement on financials because it wouldn't be fair. But there are compared to let's say 6 months ago, there are at least reasonable valuation, at least in a pocket or two over there. You can look at our cash as a proxy large cap allocation. We've kept that largely in anticipation of volatility in the market, and we would look to deploy it as the market does offer volatility and interesting prices.
From the large NBFC or the NBFC in particular space, what are your thoughts? Because we are talking about lenders, there appears to be a lot of activity there. A completely broken down, at that time very large NBFC appears to be resurrecting, have just completed a 4,000 crore rights issue with marquee names coming in. Then there is, a South-based, one of the biggest South-based NBFC in talks to bump off their housing portfolio and focus on CV, which is their mainstay. Anything beyond just the housing in NBFC space which interests you, or some MSME names?
So very clearly in pecking order in financials, housing is the most interesting space to us. Our portfolio reflects that. Then we would prefer a portfolio mix which is more secured lending on the banking side in particular. And then on the NBFC side, our preference is for lenders who are having very robust credit evaluation process and MSME lenders. So in that sense, we are trying to step into the private capex side of things. And we do believe that MSME is going to be the biggest beneficiary as well as the driver of private capex in growth and employment. So that is how we place ourselves. And every NBFC, it's a combination of fintech, it's a combination of variety of other things. We have to look at it case by case basis. Their geographical presence, their approach to business are very different. But the pecking order in our mind is very clear. We prefer the housing mortgage providers. We prefer the secured lenders on the banking side, at least the preferred portfolios on the secured side, and followed by MSME lenders.
So that's a view coming in as far as financials is concerned. But incrementally, Mrinal, which are the positions that you are looking to add? You mentioned industrials as one of the space, but what about healthcare as well? Healthcare and because I mean, off late we have seen a lot of spends going up as far as healthcare is concerned as a percentage of spends as well. Hospital stocks, however, are not really cheap. So how do you find value within healthcare right now?
A very interesting question. So healthcare is an umbrella which has gone far beyond pharma. Besides hospital, we have diagnostics. So a couple of diagnostic names look interesting to us. It's one of the names that in the new fact sheet might actually see presence. So we of late do find in the healthcare space diagnostic also a very appealing space. So where incremental monies could be deployed.
Great to have you on the show. Thanks as always for taking the time out and speaking with us today.
Thank you. Thanks a lot.